of micros, but one cannot avoid or ignore rather what has been happening on the macro front. The Indian currency witnessed a weak session and hit an intraday low of 72.73 against the dollar. This on the back of a strong dollar, heavy sell-off seen in the stock market, sharp rise in crude prices. US-China trade worries also is something that did weigh heavy on the currency front. The rupee ended at 72.63 against the greenback. Poonam Sani joins us with more details on what's happening in the currency market. Poonam, over to you.
Well, pretty much a weak session for the Indian rupee. The rupee was down nearly around 0.6% versus the Friday close. In fact, if you look at the rupee performance versus the other Asian currency pairs, it did trade amongst the worst Asian currency in trade, and despite the fact that the dollar index did trade easily below the 95 level mark. And the reason was, of course, the kind of turmoil that we have seen in the Indian equity markets. Weak equities led by the concern on IL&FS debt payment, and that led to some concerns that they could be tightening liquidity for NBFCs and mutual funds, wherein the government as well as the other regulatory authorities had to pitch in and state that they would be providing adequate liquidity to NBFCs, mutual funds as and when required. That did help to assuage some concerns. Having said that, what dragged down the rupee, of course, was the weak equities and the fact that the oil also did not help. Brent crude now is nearing $81 per barrel. In fact, there are reports that we may see further rise in Brent crude going ahead, which will not spell good for the Indian equity markets, and it would not spell good for the Indian rupee as well. China also called off their planned talks with US officials. I think that also aided to some amount of negative sentiment in terms of the trade wars, further accelerating even from the current levels. But going ahead, what we need to be watching out for, that government has stated that they would be taking measures to curb the non-essential imports. So any news on that front, and of course there is Fed FOMC meets this week, and October RBI policy would also be keenly watched out for. But I guess in the very near term, pressure on the rupee may continue given weak equities as well as higher crude oil prices.